folks. I just want to, let's see here. One more thing I got to look at so I can see the chat box. So if people leave questions. All right. I can't see how many are on here, and I'm not sure why, but you can.
Looks like we got about 19 people. So
okay, great, good. Here we are, live from Hollywood, right here in Minnesota, and we're here today to talk about investment property management the right way. And I want to welcome you to Leanne Riley's Real Estate Investing Club. And I interview expert speakers here and leaders in the real estate investing world nationally. And you get to ask questions and participate. And that's why we're looking at the chat box there. And the truth is, you don't need a ton of money or knowledge to get started as a real estate investor, but you do need to know the right formulas and the right people and how to follow a system to be a smart investor. So I'm going to introduce my guest here in a moment. I'm Leanne Riley. I'm a broker and a real estate coach, and I lead the Encore investment team of realtors in the Twin Cities, that'd be in Minnesota. And I built a multi-million-dollar portfolio in residential, multifamily, condo development, commercial, and vacation properties. We all want that now. Anyway, as a national coach and trainer, I help ambitious people build wealth as real estate investors with my proven profit formula coaching program. And I provide free education and webinars like we're on today with my investing club. And so I'm so glad you're here today to help us discuss property management. And now I'm going to tell you about Scott. Our guest today is Scott Fisick. Did I say it right?
You got it right.
Okay, good. And he's a real estate broker too at Black Rock Real Estate Group. And he's the owner of the Rental Management Guys. And he's been buying and managing investment property since 2001. So he probably knows a few things, right?
Yeah.
I bet he does. I bet he has a lot of stories. Anyway, he's owned as many as 28 units in 15 buildings, anything from duplexes, fourplexes, townhomes, single family homes, and even commercial property throughout Minneapolis and the surrounding Minnesota communities. He graduated with a finance degree from the University of Wisconsin-Eau Claire, and he lives in Independence. That's a small town, folks, with his wife, Amanda, and 3 kids. So, hi, Scott. I'm so glad to have you today as our guest.
Thanks. Thank you. Thanks for having me.
Yeah, and I always like to share with everyone, how do I know you? And it's kind of funny because real estate investing is about networking, right? And Scott and I first met, I'm guessing it's about 10 years ago, Scott, when I was doing some coaching with his father about real estate investing. And his father told me about him. And after the first day of coaching, I Googled him and I'm like, hey, this guy knows something. So we actually had lunch together, the 3 of us. And you know what? I've followed him over the years, and our paths crossed just recently when we brokered a deal together as agents for some investors on some apartment buildings. So I got to get reacquainted, and I said, hey, I got to have you on so we can ask you all about property management, especially when I found out how much he grew. So one thing I like to do at the beginning of the meeting, anybody listening, use the chat box for your questions if you would, okay? And then I'm going to take a real quick poll for those of you who can see the screen. I'm going to launch the poll. We just want to see who's listening. So all you do, I didn't share a screen, did I? Or can you see it?
Yep, we can see it.
Okay, perfect. So you vote on here of what kind of investor are you? Because we want to know, who are we talking to? People who want to get started, fix and flippers, maybe you're a wholesaler. Right now, buy and hold is winning. House hacking, that's when you move into the property. You're going to rehab and refinance. Maybe you're a realtor. We always have realtors on here. or maybe you're scaling a portfolio. It looks like we got two. I'm going to end the poll here. So quick, get your vote in. Oh, it's moving. It's kind of like a racehorse. And now I'm going to end the poll here. Oh, it keeps shifting around, doesn't it? They're voting. All right, I'm going to end the poll and then it will show the results. And the winner is, we have a lot of buy and hold investors that are on here today, and that there's a good share of how to get started and then some who are trying to scale. So that really helps us to see who are we talking to, and, you know, helps Scott and I know which direction and what you might need to know. So, okay, took the poll down. That's really great. So I'm going to get right at it here and start asking him questions. And you guys, I'll ask him a lot, but go ahead and put something in the chat box if I skipped it, or if you want something right around what we're talking about. Okay. So first, Scott, give us a little bit of, tell us what happened to get you going investing in real estate, because you own properties. I don't know if you do now, but you've done this.
Yeah, I've always had a desire. I mean, I grew up in the, as you actually mentioned, you know, my dad's been in the real estate business for 50 plus years. And so I kind of grew up around real estate, around construction. I've been in the construction business multiple times in my life. And so it's kind of in my blood. And so early in my, early in my life, I decided that I wanted to own an investment property. And so initially I was doing flips because I just thought that was it was enjoyable. I have those skills to be able to do a big chunk of that myself. And then I started acquiring rental properties when I kind of connected with I don't even remember where I connected with him. I think it was a seminar. I connected with an agent and then subsequently a mortgage broker, and they really held my hand to be able to buy rental properties. That's how I got started in the business years, back in 2001.
So you were fix and flipping on your own. You know,
Yep.
I love what you said, because it is so important to have an investment property agent. They just get it completely different. And we both are one of those. So we know what we're talking about. We can tell when we got one on the other end. It's like, oh, good. They can answer the questions.
That's right. That's right.
So, okay. So you started out and fixing, and I'm sure fix and flip is kind of hard work, isn't it?
It is. It is. I mean, like I said, I have an interest in that. I have a hobby in that. I don't. My wife teases me because I don't play golf. I don't fish. I don't hunt. I don't have any other hobbies. I kind of work on my house. That's what I do. So we fixed up our first house, and then in South Minneapolis back in the early 2000s, and saw a big financial windfall through that because of the market was just booming. And so we bought a couple other ones and fixed those up and flipped those, and that just led to eventually buying rental properties.
Well, and then whatever got you to get started on a property management company?
So then that led to me leaving corporate America. I was in corporate America. I left corporate America in about 2004 because, just to get into the real estate business full time, because I thought that would be an exciting career change. I was just tired of going to the office. And so then I work with, my primary business is to work with investment buyers. That's the side of the business I like to work in. And so I've been working in that for 17 years now. And then through that, I've acquired lots of investors that I still work with many today. And so a couple of those investors myself were talking about kind of next steps. What should we be buying? What should we be looking at? One of my biggest client groups, and we started commiserating or complaining about, we had all used property managers over the years and just how frustrated we were by things they did or things they didn't do. And so back in 2014, 2015, we started having the idea that, maybe we should consider starting a management company. And architecting it and designing it in a way that we would like to have it done as investors. And that's what really started Rental Management Guys is we formed the company and just built it that way with all the things that we wanted, how we would want to have a property management company run.
And so you've done it yourself first on all your own, and then for a bunch of clients, and now you're kind of a full service brokerage in that sense of not only can I find you the property, then I'll take care of managing it.
Yep, absolutely. So we took that, so I had been managing property by then. So we started in 2014. So we're on our 7th year at RMG. I've been managing properties already for 15 years. And then my partners had also been they had a large portfolio and they've been they had gone through a couple different property managers. They were self-managing at the time, I think 40-ish units. And so we just put our heads together and figured it out, and then started taking on clients really right in the early days. I think we were at 100 units after our first year. So. And
now you're at over what?
Over 500. So it seems to kind of vary every day. Because we take on new clients and then somebody goes and sells a bunch of properties. So I took on. I think we last month we took on 35 more units, but my clients sold 24 units somewhere else. So, but yeah, we were at a little over 500 right now.
And that's a lot to manage, like you say, when water pipes are freezing and furnaces are going out. Yeah.
But it helps to have I think there's that, and Dean actually asked a question, and what's the difference between what we do and other people do? And I think, I think the key is that we're at a nice size right now where we've got, I have employees. I've got, a maintenance manager. I've got a manager of inspections. I've got a leasing manager. I have 10 internal maintenance employees. And so we've gotten to a size now where we can support our owners versus if I was just kind of a one-man band trying to do it myself and wear all those hats. We're at a nice size right now. We still want to grow, but I think we've got all the proper infrastructure.
Yeah. So if you've got someone to call out there, a regular team of people is what I'm hearing.
Yeah. And I think Dean was asking the question, what was different? He said in the chat, he said, what's your company do differently than the companies that you were not performing as you needed? So just some examples would be, not much transparency. So we would get our bill, the property management company would collect the rent, they do a bunch of repairs, and we get this check at the end of every month, and the check was half of what we thought it was going to be. And so then, we're scrambling around trying to figure out, well, why did you take $800, let's say, out of my check? Oh, well, the water heater died. Well, there was no notifications on that. So there was no transparency. I had one situation with one other property manager. I was chasing him to get my money more than I was chasing the tenants. It's the 15th, 16th, 17th of the month, and he's not paying me yet, and I can't get a hold of him. There were other situations where we didn't feel like our goals were aligned with the property managers on a couple other things. So we try the best we can. We're trying to be transparent. We try to make sure our goals are aligned with our owners as much as possible. So.
I love that part, what you said. It's the communication, like you say, and generally how I've seen it, a property management contract, and you can correct me, usually has some sort of a amount of money, be it that if it's over $500 or whatever, then, you got to get permission. But if it's under that, you just go handle it.
Yep, exactly. And so that wasn't really being met. And then, there was lots of things where we didn't know where the money was necessarily going. We just got a bill for $4,000 to turn the unit over, and we really didn't know how'd you come up with that number. Whereas the way we do it now is, we get bids whenever we bring in a vendor. We try to give the owner some heads up. This is what it's going to cost, so on and so forth. So there's less sticker shock and less frustrations. So.
And turning over a unit, depending on who lived there, it can be minor and it can be major.
Right, exactly. So.
Okay, great. Thank you. If you were to share one piece of wisdom learned over your years in this business, what would that be?
I would say probably the biggest frustration or the biggest challenge for investors is being undercapitalized. This business costs money to, it takes money to buy a property. It takes money to fix a property up. I think that the owners that are severely underfunded and are stressing out about, every last, they should be concerned about every dollar, don't get me wrong, but the ones that don't know how they're going to fix the water heater when it dies, don't have capital resources to be able to weather that, they go through a lot of stress in this business because there are going to be surprises. Tenants are going to do things you didn't expect. You're going to have vacancies. You're going to have expensive turnovers. And if you just, that's the toughest part. If you just don't have capital reserves, this is going to be a tough business. It'd be like, walking in the rain without a raincoat. You can do it, but it's not pleasant. So.
I agree with that. And I just was talking about someone who had, the question is, how much money should I put down? And someone was putting down, they wanted to put down the most amount of money so they cash flowed, but really they didn't keep enough for the reserve, like you said. Yeah. And that, okay, your monthly payment is different, but hey, you need a $5,000 furnace here, folks. And if you have to put that on a credit card, see, it's a different formula. So I agree with you. You got to save some money for those improvements because they happen.
Yeah, because then the other side of that is that if you're not investing, if you're not spending money on, I heard somebody say the other day, it was the greatest thing, is that lots of landlords spend money on repairs, but they don't spend any money on maintenance. And I guess I thought it was a great way to put it is that, yeah, you can go and fix the stuff that breaks, but are you every year putting some money back into the property to keep it maintained? The paint on the exterior of the property doesn't just magically not deteriorate over years. The windows do not get newer. The furnace doesn't get newer. The boil, all those things you need to be thinking about and putting money away, and every year doing some improvements to keep this house at least at the par, if not moving it ahead. Because eventually you're going to wake up and you're not going to be able to rent the house, or you're going to go through an inspection and they're going to flag $8,000 worth of stuff that has to be done to the house. So you've got to be keeping it up. And if you just aren't making enough money, or you don't have the financial resources, it's going to be stressful.
Sticker shock.
Yeah.
I help people a lot of times. I'll analyze a lot of people's portfolios in my proven profit formula. And one of the biggest mistakes I find is they're not optimizing the property. And one of the ways is they're not getting enough rent. Right. They're like way off, or they're not handling things that property manager people do properly. Mm-hmm. And that's where the bleed is a lot of time on the whole investment. So I'm wondering, what does rental management guys, I'm sure you bring in portfolios and they're all messed up. What do you guys do to stop the bleed?
Yeah, you're absolutely right. Sometimes, and it's just the nature, it's human nature. A lot of owners that self-manage get too close to the properties. They get too close to the tenants, so they let the tenants get away with murder. They let the tenants get away with not paying rent, or paying late, or not charging late fees. And and I'll be honest, when I was starting the business, I was just as bad. So that's why giving to a property manager allows you to separate yourself. This is what we do for a living. This is what we do. And we're not mean to the tenants, but we're just, that's the contract you signed. The rent is due. You didn't pay it on time. The late fees being assessed. I'm sorry, I'm evicting you, but you haven't paid rent in 3 months. It's just business. So, but I think to your point, a lot of owners bleed a lot of money by not, by getting too close, by getting too close to the tenants and getting in their business. The other side of it is they're also not looking at their expenses. I mean, what are you spending money on? Are you raising your rent as much as you can, periodically? Are you going after market rent? I have some owners that haven't raised rent in 10 years. And I look at that and say, you've just left money on the table, or they're not keeping, they're not maintaining their properties, and then they've got when the city comes through, they've got big bills that they have to all suddenly deal with. There's a host of different places that you can tighten things up.
Yes, and not maintaining one thing can lead to the next damage.
Well, yeah, I mean, I had a property that and it was kind of I had one of my own properties, just the tenant never called me to tell me that the toilet was leaking, and on a single family house, I had an $800 water bill. I mean, it's, that's 8 months worth of water just went down the drain because the tenant didn't tell me that something's going on. So, I mean, I don't say that's necessarily my fault as the owner, but that's an example of I'm just bleeding money. I'm just throwing it away. So, yeah.
What about if somebody is a brand newbie, they got their first, maybe second rental property, they can throw an ad up on Facebook Marketplace and find someone. That's probably what they say. They can get a tenant, but then they don't know how to do the paperwork and all that. But what do you suggest with a person with only 1 or 2 pieces of property? Should they try it themselves, or do they need a property manager?
I think you could go both ways on that. I mean, I think, in some respects, it's good that they learn and understand how to run a property, so they get that education, so they understand, what tenants do and don't do, what it costs to paint a unit, what it costs to bring out a plumber, things like that. I think that's good. But I'm going to say that with the caveat that you also have to be wired the right way. You have to have the right personality. You got to be prepared for that. I mean, I've had some owners that have had, and I'll make an extreme example, but I had a set of owners that owned one house, a single house in Minneapolis that was under management. The same tenant lived there for 5 years. She paid her rent every month on time, but yet they were so stressed out about having that property and so concerned about it, they drove by the property every Sunday after church to make sure everything was okay. So, that's an example of an owner. I just am not sure that owning rental property is right for them. On the flip side, you also have to look at your life. I mean, if you're newly married and you have three kids under the age of 5, you maybe should try. Maybe you shouldn't be managing the property yourself, because maybe you should be spending more time at home. So I don't want to say there's one size fits all, but I think there's a bunch of different factors that play into it. So
I would agree with you. And when I run into someone who has a very soft personality, you're probably not a very good property manager, because like you say, then the tenant gets the upper hand. Mm-hmm. And I've taught property management before. And the one thing is, you build that relationship the first time they meet you to ask if they want to rent it, and whatever happens there. And if you let it go once, that late fee, you're toast.
Right. And I think a lot of that also comes with planning and again, your personality to do that. I mean, I think and we do that internally, is that here's our policy, here's our plan, here's our procedure, and we can always fall back on, nope, that's the standard that we have. I mean, a small example is, a tenant wants to move in and doesn't have first month's rent when they want to pick up the keys. Well, I'll have my first month's rent on Monday. Can I still move in this, today or tomorrow? No, I'm sorry. My policy is this, and you can't, because, in the back of my head, I'm thinking, because I've been burned, 12 times over the years where, the tenant moves in and then doesn't pay me. So I think to your point is, if you do have that soft personality and you want to self-manage, you've got to set your rules of the road, and your policy and your procedures, and never deviate from them no matter what. So.
And it's way easier, like you say, when it's your policy and you're a bigger company, they don't try to weasel around it.
That's right.
Yeah, great answer. So I want to talk about the elephant in the room because we're in a pandemic right now and the eviction moratorium, can't not read about it. It keeps getting extended and there's the federal one and then there's a state, but it keeps going. And what are you doing to help owners through this? I call it a jungle.
Yeah. Unfortunately, we are in, we've been in the eviction moratorium for what, 10 months, 11 months, something like that. It currently, the state and the federal eviction moratorium goes until March. For the most part, I'm hearing that the Biden administration it's pretty likely they're going to extend to September. Even if they don't, I would guess that Minnesota is going to continue to extend until probably June or July. I mean, I think the best way my attorney said is that once we see that all the restaurants are open at 100%, everything is open the way it is, maybe even the mask mandate comes off, the governor is going to take a pause and wait 30 days, and then he's going to give up his emergency powers and which includes the eviction moratorium. And that's the challenge. Is even then we've got 12 to 18 months worth of evictions in the pipeline that we're going to have to, the courts are somehow going to have to get through. So it's a pickle. So how are we helping our owners? A lot of them is just also understanding what they can and can't do. A lot of our owners have been fortunate. They haven't been affected by non-payment of rent. We have been also we've been helping our tenants find money through subsidies and government. We actually filed for a couple dozen of our tenants for both Ramsey County and Hennepin County. In December, we filed for them to get money from the CARES Act. I think we got about $60,000 from the CARES Act for our tenants, which then paid off our owners. So we're doing everything we can. There's not one size fits all. There's not a perfect solution in this scenario.
I love that solution because that's what I've been saying and providing links to in my Facebook group and everything for real estate investors, is because the little landlord doesn't realize there is programs out there to first help the tenant. And then if they're not helped, the landlord even has a program. Right. So, and we're fortunate we have that here in Minnesota. Every state doesn't have that, but boy, you have to know you have to know that, or you're sitting there just not getting rent. So it's nice to know there is help to fill the gap. And that's great to hear that your company did something proactive to make sure.
Yeah. And in fact, we're actually, we didn't think we'd have to do this, but we're actually going to bring on another staff member that's going to, we're just seeing, because we're not seeing the end of this, we're bringing on another staff member in the beginning of March to handle this side. I hate to use the word case, do casework, but they're going to be caseworkers for these tenants and hold their hand through the process to continue to get money. So,
I built my big $14 million portfolio on Section 8 rentals, and it really was working with what was available and taking people out of the homeless shelter. And it was a circular way to work with and help people, but also make sure the bills are all paid through that, working with the system. And I'm sure you have a lot of Section 8 rentals too, right?
Yeah, we have, I don't know what the count is today. I would say at least, it's at least 10%, if not 15% of our properties are Section 8 properties. So,
not as many, so there's so many ways to run a rental property, isn't there?
Yeah. So we 50 to, I'm guessing probably 75, maybe 100. I don't know. Maybe between all the counties, maybe 100.
So the thing is, if a owner works with a property management company like yours, this is what Scott and I were talking about before you guys all came on. The great news is he's got a straight line feed to an attorney. So he can, and he's been being asked the same questions over and over, I'm sure. So at least it's a reliable answer. And many times I see this on Facebook all the time. They put their question out there, they get answers from who knows who, and you start to make a decision based on 30 answers. It's no different than if they put out there, hey, I need a sheetrocker, and there's 10 sheetrockers on the list. And that doesn't mean you're not going to get burned. You still have to, you know, interview the person, make sure they're going to show up, make sure they're insured, all the other things. So a property manager like you, just, you take care of all that, like you said, and you can sleep at night and not worry about your property.
Yeah, I mean, because this is what we do. I mean, this is what we do, you know, 80 hours a week. You know, the average landlord that owns a couple properties, I mean, this is his side hustle. This is something he does a couple hours a week. He's not intimately involved in this, you know, and in the weeds like we are. I mean, I get that question all the time. I get that question a couple times a week of what can I give my tenant notice to vacate? I want to sell the house. You know, I answer that question a couple times a week, where the average landlord probably doesn't know the answer to that question. So
right.
The answer
in Minnesota, when you sell the property, the tenant and their lease go with it.
Yeah, that's right. And so, yeah, the answer to that question is no, you cannot give notice to vacate to your tenants for any reason at this moment. So it doesn't matter that the lease is expired, doesn't mean that they're bad tenants, doesn't mean that you want to sell the property. You cannot give them notice to vacate at this point.
So we're back to that conversation about cash for keys. You can work out arrangements if people will work with you.
Yes, you can definitely, give them, you know, you can give them money to go away. I mean, that's always a challenge. It can be a little bit, I mean, these days it's because the market is, you know, there's not a lot of rental properties out there, and since the tenants know they can't be pushed out, you know, expect that you're going to pay 2, 3, 4 times the rent amount to get them out. I mean, I have a peer that pays, you know, will pay a non-paying tenant. So they already owe a couple $1,000. He's been paying them $4,000 or $5,000 just to go away. So I mean, because he knows that they're gonna be stuck otherwise. So yeah, it's not a great thing. So
isn't it? You know, so what about the vacancy rate today here? What are you seeing?
It's very low. A lot of, you know, the vacancy rate, a little bit depends on the property and the location, and you know, and with the property, the quality of the property, the number of bedrooms, the location, and the price of it. So, but the vacancy really generally is low right now. You know, the area that we're having the toughest time in is actually condos, downtown condos, and uptown. You know, are the 2 problem areas, and everybody's like, wow, that's weird, because those are usually hot areas. Well, the thing is that the reason that people move into uptown is so they can go to the coffee shops and the bars and the restaurants and walk to the lake and all that jazz. Well, during COVID, that's all shut down. So there's less interest in doing, you know, and paying $1,600 for a 1-bedroom in uptown when you can't do any of that stuff. So same thing with downtown condos, where, you know, everybody's working from home. You know, in the past, you'd live downtown, walk to work, go to the great, you know, bars and restaurants downtown and everything. Well, that's all shut down. So,
you know, I think also what I've seen in the real estate market, the crime that has developed in the uptown or downtown area is affecting people selling, or just kind of the area. It's hurting.
Yes.
Let's put it that way. It's hurting. You
That's
know,
right.
If someone's buying an investment property, one of the financial numbers we always talk about is the vacancy rate, and it is very low right now. So would you say, if you're working with an investor and they're trying to figure out their numbers, you know, is it safe to put 5% vacancy rate right now?
I think, again, it totally depends on the property, because, you know, if you're coming into the duplex and the tenants have already lived there for multiple years, I think you could probably go lower. You know, if alternatively you're in a the property needs a bunch of work and it's not a great property and not a great area, maybe you need a higher vacancy rate because it's going to take you a couple months to get the thing filled. So I think you've got to look, I think putting just a standard 5% all the time can be a little dangerous. And obviously as you go bigger, as you get into larger build, obviously a duplex, you have a 5% is not, if you have half of it vacant, you've got a 50% vacancy rate. So, versus, a 100-unit apartment building where, you may not have 5 units vacant at any given time. So some of it just depends on the property type and where it is. But so
I noticed, also this is just what I noticed from some people I know who had rentals they took longer than I thought. And part of it was in an area, this happened to be Edina, because there's so much new build in the apartment condo world over there. I think the client has a lot of choices. So
right.
Something a little bit older, a little off the beaten path is just, people will pay $2,500 or $3,000 for that chic condo. Right,
it's an image thing, and you also get underground parking and the pool and and where all the other hip people are living. Yeah, that's why Uptown is suffering a little bit. So they overbuilt in Uptown also. So.
It's all about location, though, as you said, and we do have a lot of new builds that are competing, and it's about the condition of the property. I'm wondering if you guys take on a new client and, the place needs fixing up, do you guys, can you handle that?
Sure. Yeah, absolutely. I mean, we try to draw the line at anything that would be more of a general contractor level project. Like we won't remodel a bathroom or a kitchen or, but the typical stuff, paint and carpet and, flooring, those type of things, absolutely. And occasionally, if it's a long-standing customer, we will help them. We will, guide them or put them in touch with a trusted contractor if they wanted to do a kitchen or bath remodel. But it's not what we do. We're not project managers. We're not general contractors. So.
Okay, and then with the fair housing practices right now, like Minneapolis is kind of coming down with some new rules of their own.
Right.
And it's hard. One of those rules has to do with tenant selection and maybe your credit scores and these different things that an owner might use as a criteria.
Right.
Are you seeing that tougher?
Yeah, it was an initial frustration. So for those of you that don't know, City of Minneapolis came out with a rental criteria guide or ordinance last year. So they call the renter protection guidelines. So basically, in a nutshell, it says that you can no longer deny tenants for credit. You can no longer deny tenants for any eviction over 3 years. You can't deny them for even an eviction on their record that was settled within the last 3 years. You can't deny for certain felonies that are over 7 years old, and you can't deny for other felonies that are over 10 years old. So, wow. And you can't charge double deposit. That used to be another way that you could mitigate your risk is by charging double deposit. So, wow. Now you're kind of stuck that you could have somebody with a, murder conviction from 10 years ago that has a 400 credit score that had an eviction 5 years ago and had, that went through and had one just last week that was overturned because, as you know, no owner brings an eviction action against somebody for no reason. So, they're doing it because they didn't pay their rent or there's a problem. So, but if they settle, you can't use that anymore. So one of the questions Nathan asks is, what can you deny for? Well, you can still deny for income level. You can still deny for felonies less than 7 years, certain misdemeanors less than 7 years. You can deny for bad rental history. So I encourage every landlord that I know that doesn't work with me, when you get, when rental research or rental history reports calls and asks for a rental verification for a tenant, please fill it out, because that's the only way we can help each other and say, this was a horrible tenant, or they still owe me $9,000.
That is so true, Scott, because I always was concerned about the landlord who wants them out of their property, who says, oh, they're great, because they want them out of their property and they're handing them over, and we have to work together as owners.
That's right.
And pass on good information.
Yeah, so the answer to your question, Nathan, is it made it more difficult. And then I'll just kind of share this with everybody, just so you're kind of all aware. Two other things. So then St. Paul enacted what's called a just cause ordinance, and the just cause ordinance is kind of on the other end of that spectrum, which basically says you can't get rid of a tenant for any reason other than these 12 reasons. And so the lease is expired. You want them to move out because they're just a hassle. They're a pain. Maybe they play, they have too many guests. They smoke in the unit. They have too many, whatever. You just want them to go away. I mean, we all have those tenants. They're just a pain. You can't get rid of them. You cannot tell them. You cannot ask them to vacate. They have to have. You have to be able to put them in one of those 12 buckets. One of those 12 buckets is they can be late up to 6 times in 1 year, and you still can't get rid of them. 5 times. At 6 times, you can get rid of them in a 12-month period. So then you can get rid of them. And lease violations. Let's say they're smoking in your unit. You can give them notice to vacate, but even then, they can go to court and say, well, I won't do it, judge. I won't do it anymore. And the judge most likely is going to throw that out, and you can't get rid of them. So St. Paul has enacted that ordinance. Minneapolis is going to do it here this year. And Minneapolis is also talking about rent control. So basically, you cannot raise rent more than X% per year. So in 2021, everybody that owns property in Minneapolis, raise your rents a lot, so that you start getting in there. So just a heads up on things coming down the pipe.
Well, and Minneapolis is working on a new ordinance too around when you sell your building, you have to give the tenants first right of refusal. TOPA, it's called.
Well, yeah.
A whole nother headache.
That's right. Well, and yeah, thanks for reminding me, Leanne. Yeah, you're right. So you're right. So when you sell the building, they're working on it. Yeah, you'd have to give them first right of refusal, and then the tenant has 45 days to decide if they want to buy the property. And if they decide that if they make an interest in the property, then they have another 180 days, 120, 180. I think it's 180 days to then, negotiate and get legal advice and find financing and to eventually buy the property. So this is all before you've put it on the market and offered to anybody. And then the really interesting kicker hits in here. So let's say they go through that whole thing, and now, 45 days plus 180 days, 225 days down the road, they decide they can't perform. Then they, and then you put it on you list it on the MLS. They also have first right of, it's not refusal. They basically if you get an accepted offer for X, they have the opportunity to buy the property at X in place of the public, person that you found in the MLS. I can't remember. It's not first right of refusal. It's something. There's some kind of another option. So. Wow.
Some new crazy thing that they're looking at.
Well, and then the other thing that, Leanne, you reminded me of is the other thing with just cause, which is in St. Paul and coming to Minneapolis, is that if you want to sell your property, you want to just get rid of it, you want to remodel it, sell it, whatever, you have to pay the tenant 3 times the rent in order to give them for moving expenses to get them to move on. So you basically give them $5,000 to give them notice to vacate. You have to give them $5,000 so they can go away.
It's crazy. It's totally crazy. So rental rates, they're going up. They're really holding steady. Where do you think they're headed?
Well, I think they're going to continue to go up. I mean, I think they have to, because if we have to deal with all of that, if I have to pay some tenant $5,000 to move out, of course I'm going to collect that from all the other tenants. It's, it's like taxes. And if I have to, if I can't evict tenants and one, some tenant owes, 9 months worth of rent, I got to make that up somewhere else. So rent's going to go up. There's no way around it. Or if I have to rent to, the felon with the 400 credit score that, has an eviction from last year, the risk is higher. So therefore I need to make more money on all my properties to offset that risk.
Wow. So, in your eyes, how long does it take to right side a property? Because you get some that are upside down, or you maybe have bought some. How long does it take to get something to where it should be?
A lot of it depends on what the problem is. If it's a building problem, or if it's a tenant problem, and then the other piece is how aggressive the owner wants to be, or how much. And this kind of goes back to the financing or the capital. It's very tough. It takes a long time to. I'm working through that right now with a building that has not really been maintained very well over the years, and every plumbing pipe leaks, and every bathroom in this place is a disaster, but the owner doesn't have very much money, and so I'm having to just kind of pick little bits and pieces at a time. That's going to take a long time, and I have problem tenants there, and I can't evict them to now. So it's going to take a while for me to get that building turned around and under control. Alternatively, if I could move tenants out whenever I wanted because they're problems or they're not paying, and the owner is willing and has the ability to spend the money, I can get those things turned around. 90 days is about generally I would say is about kind of when things stabilize. It takes about 90 days for us to kind of work out all the kinks.
Yeah, poofda. Okay, so you work with a lot of investors. What do you think is in store for 2021?
I think we're still going to see. I mean, the real estate market is at a historic. We've got all these historic things happening. I mean, interest rates at 3.5% on which on your personal residence can be below 3% on interest rates are insane. We thought that 4% was great a couple of years ago. That's going to still be there, but I think on the flip side, we're going to still see inventories are at historic lows. We're at something like 5,000 units right now on the market, and a stable market is like 18,000, and we've never seen numbers this low. So what that means is that it's tough for investors to buy these days. It's very difficult to find good values in the market to buy. But flip side, it's a great time to sell. If you've got a property that you just kind of you're just sick of it or whatever, sell it. You're gonna do just fine. So I think that's what I'm seeing a lot. Like I said in the beginning, I'm seeing tons of my investors cashing out. They're just saying, look, I paid $135 for this 5 years ago. I'm selling it for $235 right now. I'm going to take my $100,000 in profit and I'm going to just sock it away in the bank, or I'm going to go buy a cabin. I'm going to do something else with it. I'm going to hold on. So I think that's what 2021 is. I don't anticipate a big crash. Who knows? I mean, we never.
I don't either at all. And I don't think there's going to be a big old foreclosure thing coming up or anything like that, in my opinion. Not right now.
I don't think so.
Not with the low inventory. What about pets? You're a property manager. What about this whole emotional support animal thing?
Yeah, I know. It's ridiculous. You can get the emotional support animal, forums off the internet and get some, quote unquote doctor from California or wherever to sign the thing without any, without ever seeing you in person or talking to you for 5 minutes. So we've just really, this is also a really bad place that you could get yourself sued, get yourself, reported to the Attorney General's office or whatever. It's just not worth the fight in this space. You ask them for the documentation and you get what they give you and you shut up and deal with it. So it's just not, because there isn't a lot of history in here. So, you don't want to be on the front page of, the Star Tribune for the one that's in court spending tens of thousands of dollars because you deny the tenants
no.
fuzzy little dog because they need that to relieve their stress. It's just not worth the battle. So
are you structured fee wise just like any other property management company in general, a percentage of the rent?
Yes, exactly. That was the other thing when we started the company many years ago. We were kind of annoyed by all the junk fees that a lot of the property managers have. They've got a fee for everything, I swear. So when we structured the company, we tried to eliminate that. So we really just have a couple fees. We have a management fee, which you go to my website, it's 8%. For bigger portfolios, it's 8% of rent collected. For bigger portfolios, we discount that. We get paid first month's rent to fill the property, which is pretty common in the industry. And then we have if you choose to do a lease renewal, which most of our owners just let leases roll month to month, it's a simple couple $100 to go through the rigmarole to do that. And then one last fee is we add a little surcharge onto any invoice that we pay. It's almost like a use tax or an excise tax. The more work the property needs, if we got to pay a plumber, we add a little bit just to handle paperwork and dispatching. But otherwise, all the other junk fees, like we were talking about CRPs before we came online. I have competitors that charge the owners $15 to prepare the CRP. I don't do that. They charge an onboarding fee of $100 per building. I mean, it's crazy. So I want you to be my customer, but you have to pay me to be your customer. I haven't figured out. It's a good gig. It's a gig if you can get it. And then there's a bunch of other junk fees. I mean, the other one that a lot of owners don't know is like, what about late fees? The tenants didn't pay by the 5th, so you charge them 8% on a late fee. So let's say there's $1,000 rent. And you should be charging them 8%. It's state law. You can do that. Do not sign another lease that says $25 late fee. Hit them with the 8%. So that $80, a lot of property managers keep that $80 because they somehow think that that's their money.
Oh.
I mean, we pass that through to the owners. That's the owner's money because they've got bills. They've got to deal with that. So there's those small places. We don't, there's no other, we show all our invoices. So there's no, if I buy $27.50 worth of parts at Home Depot, you see the invoice. I'm not just marking that up, and behind the scenes, I'm not taking kickbacks from my vendors, which a lot of the people do. A lot of my competitors do.
How many employees or people on your team over there?
I should know this right off the top of my head. I think it's about 16, 17. I have a bunch of maintenance guys. I have 10 maintenance guys.
Wow.
Yeah, it's probably 18 or 19. I think because a couple of the maintenance guys are part-time. But yeah.
Okay, we got a question there from Dean. How do you handle snow removal and lawn care? Do you get a vendor for each property? Or
yeah, I vendor it out. I vendor it out. There's a lot of owners, a lot of landlords like to find somebody in the building to do it. That's kind of what they do, and it's cheap to do it that way. But I guess I've always taken the position of I've never had goods, over all the years, over all the properties I've managed and owned and everything. I can count on one hand how many tenant caretakers have done their job and do it decently. So I don't like having caretakers because they never do a good job. It's very hard to fire them. Most of the time you don't. Most of the time the landlords just complain, the owners just complain about them and they never fire them. So I don't hire in-house. I don't have people working at the building. Plus, I think it's a big liability. If that caretaker doesn't salt that sidewalk and somebody slips and falls and breaks their leg or something, who is that person going to sue? They're not suing the caretaker. They're going to sue you. You're going to sue you as the owner. So are you willing to put that liability, do you trust that caretaker enough, that person shoveling the snow enough to, to put your liability for your building on there, or when they're cutting the grass. If the caretaker, runs over his foot when he's cutting the grass, who's paying for his medical bills? At least if I vendor this out, I vendor it to a licensed, insured company that this is what they do. They've got workers' comp insurance. They've got liability insurance. If one of their employees runs over their foot, that's their problem, not mine. So I don't know, maybe that was a long answer. Dean?
Vendor it out. Yeah. But that's the thing. You're going to coordinate all that, and that person, that owner can sleep at night and he doesn't have to drive by.
And we're a little different. We are a little different that, on things like that, it doesn't matter since I'm not making money on that. I don't really care. If the owner has some preferred snow guy that he likes to use that's been doing the building, fine. And they want to pay him and they want to talk to him, they can do that. It doesn't bother me. I don't need to control that as long as it's getting done. So.
Okay. Now, I believe buy and hold is the ultimate path to passive income. Do you?
I do. Yep, absolutely.
That's why you're managing all these people's property, right?
Yep, that's right.
Okay, what's the worst thing that happened and how did you solve it? Just curious, like you must see a lot of awful things.
Oh, wow. That is a big question. If you're in this business long enough, you're going to have people die in your buildings.
Yeah, that happened to somebody I called yesterday. Somebody died.
Yeah. I had two last week. I had three last week. It was weird. I don't know why I had three in 1 week. I had a house. So here's a short story. Had a duplex. The two brothers lived upstairs in a duplex. We do periodic inspections of all our properties every 6 months to make sure everything's going well. The brother these tenants paid their rent on time. Never had any complaints. Never had any kind of payment problems or maintenance requests or anything. So, when we went over to do an inspection, the one brother said, my other brother is dying of cancer. He's got a compromised immune system. I prefer if you didn't come in the house. Okay, we can honor that. So that went on for, so we just skipped that 6-month review. And so we went in the next year and we found out, well, they didn't want us in their house because they were hoarding cats. So I think at final count, we pulled 64 cats out of this upstairs of this duplex. And so you can imagine what 64 cats smelled like. And they also had the cat tree was underneath the attic access, and somebody had popped the panel to the attic access. So the cats were actually climbing in the attic too. So that's probably one of my craziest stories. Of people dying. So
the cat house you discovered.
Yeah. So we always joke about that when we're talking.
Okay. We are coming up on the hour. Anybody got a last minute question? And then I'm going to give you the information of how to contact Scott. I'm waiting for that last minute question. Then I'm going to put up the screen here.
I did have a question. We didn't answer. What was the biggest single thing you did to grow your property management business to a scalable level? I think it was just, getting out there and talking to people, and being different and differentiating ourselves. I don't know that there was one marketing tip that we did or anything like that. So.
Okay, and I hope this is the right phone number and the right, they're not calling rental management guys, but they can look that up on the web, right? Rental management guys.
That's right.
And they'll tell everything about his property management company, but here's Scott's direct information here. And then I want to, thank you so much, Scott. It's just really great to talk to a live property manager because so many times, you guys are really busy. There's a lot going on, right?
My phone has been blowing up while we've been.
Oh, I'm sure the whole time we're on. And what's really cool too? I do these all the time, and everybody stayed on the whole time.
Yeah.
I wanted to hear from you, Scott. One last thing I want to say is, you guys, I also do free strategy sessions. If you're going to build a portfolio or whatever, I have the two things, remember, the Encore investment team and the proven profit formula, because there's way more to building a real estate investment portfolio. It takes a certain amount of knowledge, but it doesn't take that long if you have the right knowledge. And that's why I interview people like this. These are all ways for you guys to get that right knowledge to be able to handle a portfolio. And luckily we got guys like him. You don't have to do it yourself. And 8% is not that much to have this all handled. So I'm going to stop now, and we will put this on Facebook Live there. Jeannie put it in. People are saying thank you, Scott. They appreciate it. So thanks, everybody. And next time we're going to talk about syndication. And, some of those people who are selling those apartment buildings nowadays, they're putting their money in syndication. So I'm going to educate you on that.
Perfect.
So thanks, everybody. Thank you, Scott. And see you next time.
Okay.